Okay, excellent. Right, okay, so I will start. So thank you very much, Francesca, for giving me the opportunity to talk today. It was actually, in reality, quite a difficult presentation to plan for, and that's purely because, in terms of space as an opportunity, it's really there's a lot going on, both historically, currently, and in terms of the opportunity coming up. So really, for the context of this, I'm just going to give it in. This is purely my personal opinion, as opposed to Issa's opinion, and I will give a couple of nuggets in terms of really this is how investors are seeing the space sector as a investment opportunity. Right. Okay. So I don't. Somebody's saying they don't see. Right. Okay. So hopefully it comes up again. Right. Okay. So a bit of context really. I'm based in London. I work at the ECSAT building. My journey in terms of space began very long time ago, probably about 15 years ago, when I co-wrote a piece about commercialization of space stations. So that was about 15 years ago. A lot's happened in the last 15 years, and in particular, the investors started waking up when pieces like the Financial Times piece, where space, the final frontier for investors, was published, and this started causing a lot of interest in terms of new terminology, for example, new space. And this was when there was interest in terms of tourism and constellation plays and companies such as OneWeb. The names were starting to crop up, and that was realizing interest. Well, 3 years ago, I moved back to ESA and was, as Francesca said, part of the Space Solutions team at Harwell. Okay, so my title is a bit weird in terms of business broker, and to give it a bit of context for those people that don't know me, um, there are two things that I do. So one is I support the businesses that are coming through the ESA, let's say, venture portfolio, in terms of trying to find follow-up investment and investment opportunities where we're trying to match the public money with private money. And the other thing that I do also is that I work a lot with VCs. Venture capitalists, I'll explain a bit later, is essentially one source of money, and it's private money, whereas ESA is public money. VCs are interested in space as a sector, and that's where, let's say, the term investors will come along. Okay, some people call VCs venture capitalists or vulture capitalists. It's not really the case. But the thing is, but the problem, the issue here is that space is becoming a very interesting sector for investments. Okay, what do I mean by investors? Can everyone see this slide?
Yes, well, I
Yes.
can see it.
Okay,
Yes, we can see. Yes.
Yeah.
okay, because
Yes.
I can't see the chat here. All right. So this slide is really quite important in terms of showing the investor journey. The reason why I put this up here is because when we talk about investors, and when I talk about investing, let's say within the context of talking to technical officers and other officers within ESA, everyone says, "Well, I actually don't understand what investing means." And if you look at this, so this is a very nice slide which shows you the different, let's say, the investment life cycle or the money life cycle that a typical business could go through. And the path of the business actually is the red curve that starts on the time axis with revenue zero, and then goes into negative, and then starts climbing eventually through back to zero revenue, and then suddenly you get a positive revenue, and then it gets a bit funky where it plateaus off, and then it goes off again into an accelerated growth. Okay. The interesting thing about this curve is that if you look at ventures, whether they're successful or not, at some point in their lives, they would have actually been on this red curve. And there's an interesting part of the red curve, which is the negative revenue bit, which is the valley of death. And this is the really important space where I would say 75 to 85% of businesses actually enter a valley of death. And this is where we see a lot of activity in terms of investors investing into a particular activity. And so you see here cumulative equity investment. So let's say private money that's gone into businesses is quite large. It's over $100 billion, and that's globally into 822 companies. And if you look at the 109 billion, if you look at the investment to date for the Q1 of 2020, it's already 5.4 billion. Okay, and that's globally. So what does that mean? Well, actually, investors are putting money into businesses that are early stage, so they haven't even they don't even have any revenues, that are in the value of death. And also you have companies that are early stage, which is basically they're beginning to start the journey in terms of actually getting some revenue into the business. And that's the green square that that I've highlighted here. Okay, well, the title is Myths and Realities and Outlook. And so the important thing to note in terms of investors is that when investors look at space, they think, oh, great, space is the launchers, the satellite manufacturing, CubeSats, and human spaceflight. And that's really quite sexy, and I want a piece of that. And the first myth that needs to be dispelled with investors is actually, you know what? That's not the case. That really isn't the case at all. And you've got a great diagram here from Phil Haynes, who's at ECSAT. And he basically uses this slide to demonstrate to everybody that actually, you know what investors know as space, which is the space heavy industry, is only a tiny portion of the actual commercial sector, and only a tiny proportion of what we do as an agency or agencies as a whole. And you see here that satellite, the launch industry, it's only 6.2 billion in terms of revenue for 2 years ago, and you know that's nothing compared to the ground infrastructure and also the satellite services. And so when you look to the left at the ground equipment, this is quite interesting, because all of a sudden you're opening up the eyes to investors and saying, well, actually, you know what? You don't need to invest in rocket launchers, in launchers, in CubeSats and microsats and $100 million satellites, because actually the ground support equipment is really quite important, and it's actually a growing sector in terms of revenue. And so now you're in the realms of GPS chips and networking equipment and GNSS and 5G and 4G and 6G and whatever the next G is going to come along. So now you are broadening the scope of investment activity, and all of a sudden, well, actually, as an investor, I didn't really understand space, but as an investor, I actually understand GPS chips, I understand hardware, I understand telecommunications. And if you look at the satellite services on the right, it's exactly the same sort of scenario. All of a sudden, you are now telling industry or investors that actually, you know what, space isn't the launchers again. It actually is satellite services as well, and there's a sizable revenue as well in the satellite service sector. Okay, it's not as good as it used to be. Because revenues are down, and actually satellite services in terms of telecommunications, satellite TV, radio, and broadband services and things like that, you know, the revenues have gone down purely because of, let's say, fiber-based streaming services. But the fact is that there is still revenue there, okay? And the revenue there at $126.5 million billion dollars, sorry, is still quite attractive to an investor, because at the end of the day, an investor, no matter where in the company life cycle it's going to invest, is looking for a return. It's looking for, how can I make money from this sector? Okay, so let's talk about the reality, and I'm looking at the time here because we are about 9 minutes, about 10 minutes into the presentation, and I really wanted to look at the questions in the chat. So this picture here is a picture of the COVID virus. and the COVID virus is proving to be quite interesting in terms of the sector. So we're seeing if we look at space news, here are some articles I took off this morning in terms of bankruptcies and political praise, but uncertain funding future, people being laid off, queues in front of the job center. But if you look at the top right side, you see this guy that's in front of his Zoom screen. And really, that's the reality now, and that's the reality of space companies. The fact is that you're gonna have a workforce that's going to be remote, but also you're going to have a talent pool of employable people that's going to just increase significantly, certainly over the next year, and that actually is a positive reality. And the reason why it's a positive reality is because basically it's showing that, you know what, the space sector as we know it is probably quite fractured, quite broken. So if something is broken, the default is to actually fix it. Well, actually, why don't we do something a bit different? Why don't we actually build something new, something enhanced, something new, something improved, using the capabilities that are being, let's say, released at the moment? The sector still stays the same. Here is in terms of sector components, here is a landscape diagram from a European Investment Bank report from last year, which shows that there are different sectors, subsectors that are serving the space community. And so this, I think, is a great opportunity now to start building a more resilient space sector, which could certainly weather the storm for the next 10 to 15 years. So the outlook is starting to look a bit positive, actually. And so if we've got companies that are, let's say, virtual in nature, and you've got a workforce that is being a rather technical workforce that's being laid off, what you're going to start seeing here, I would certainly see, is a different type of space company and diversity in what we would consider as space companies. So here's a great schematic from Seraphim Capital. It shows you that it's showing the investors that there is companies in the upstream and the downstream sector. It's showing that there are companies that are building, that are creating downlinks, that are launching services, data and product, and also that there's actually commercial services beyond Earth orbit as well. And this is really quite interesting for investors, because investors look at this and go, oh, okay, I understand these types of businesses now. I don't understand space, but I understand that there are businesses that drones and UAVs could be complemented by space. I understand that I don't have to just look at launch services. There are also other things, other types of companies that we can invest on. So, the reality is that actually, we're going to see more of these types of businesses. Okay, so going back to continuing with the predictions. So I've put here the graph around startup financing, and I've also put a red line, a blue arrow that goes all the way across, and you'll see that also I've put some squares in here according to, I've basically used a traffic light system. Looking at the agency logos here, the reason why I've put these agency logos is because that represents essentially the public money. And I think because now we need to start building, in a post-COVID future, we need to start building and capitalizing on public money support to keep the sector growing, or let's say to rebuild the sector. I think we're going to see a more importance on public money, not just from ESA, but also from NASA and also from other agencies as well. And I think that's going to be really, really important. And that's purely because space suffers from, or space ventures suffer from a lack of being commercially viable. So other organizations need to come in and make and help support these companies and say, you know what? We don't need to look at companies in terms of financial return. Maybe that was the old way of doing things. But if we look at a much longer term and trying to build a resilient space ecosystem, then we need to look at how public money has actually created that ecosystem. And we had that launch. over the weekend, and that's really quite interesting because when you look at the numbers of the SpaceX launch, well, actually 98% of that funding line came from public money, came from NASA. Okay, not shareholders, not Elon Musk and his rich friends, but actually from a public body. So I think we're going to start seeing more of these types of activities, hopefully going into very large projects which are supported by private money. Okay, where I see the reason why I've shown the green and the red and the yellow squares is purely because, well, at the beginning when I presented the startup financing circle, the red square was actually a yellow square, and the reason why it was a yellow square because the norm or the default hunting ground for investors. Well, actually, that's turning out not to be the case anymore. So investors are starting to be the investment community is being a bit more cautious, and also they're looking at their current portfolio and trying to figure out, okay, which are the companies that are going to weather the storm. But the interesting thing is that the guys that are in the valley of death, well, actually, they were all, and that's the ones in green, in the green square. Well, they were always risky, regardless of whether COVID existed or not. And so we are seeing much more interest in terms of investors looking at these types of businesses because essentially they're looking long term. They're trying to see, okay, you know what? These guys were risky before. The space sector is a bit broken at the moment. So maybe there are companies in super early stage businesses that actually will be in a very good position now to survive, certainly in the long term. So this is where we're going to see more and more activity in the much earlier stage businesses. And then you've got the companies that are in the yellow, and these are companies that are floated on the stock market or becoming very close to floating on the stock market. They already have revenue. The issue here is that space sector has sort of gone into hibernation, but at some point they're going to wake up and they're going to be buying commercial services again. And we're starting to see that now with launches and with certain programs that are coming online and being delayed by a couple of years. But the fact is that these are commercial contracts that are in place, and investors are still looking at these companies because they take great comfort in the commercial contracts that were placed pre-COVID. So really the prediction here really is that the landscape is starting to change slightly. I think there will be much more importance in public money being matched or co-invested with private money, and really with a huge amount of human capital that's been let's say released into the market, and the fact that space sector is a bit broken, it's just a case of building forward. Okay, and that's me. So what I will do is I will stop presenting and have a look at the chat.
Okay, that's great, Jason. Thank you. The first question was asked by Eduardo, and it was already after the second or third slide, I think. But all of these businesses require large capital expenditures and entrance barrier. Only for big caps, where are the SMEs in the diagram? Okay,
that's a really good question in terms of space is super expensive. Well, if you when I scrolled through the presentation to the Seraphin Capital presentation, you saw that actually there's lots of companies there that don't have big capital expenditures. Okay, so space companies essentially are being divided into ones that are developing space assets and ones that are using space assets. And you see here that the interesting thing is that space companies are becoming a lot more digital in their sector, in how they are being created. And so because launchers and satellite manufacturing is such a small part of the sector, we are seeing more investment into, let's say, applications. And if you're a space business developing applications, well, actually, you can just get rid of the space bit and actually call yourself a digital business. And so then now your capital expense is going to be on salaries, not really on making anything. Okay. And so in terms of the diagram, that those businesses are really in the green square, right at the beginning, the valley of death type businesses. And in terms of capital expenditure, I was going to show the levels of investment, but as an investor, you can invest as little as a couple of €1,000 into a space business. Okay.
Okay, we go to the next question by Liana. How do you see Brexit affecting the UK space markets?
Okay, so I get asked this question a lot actually, and what you are seeing here is there are two parallel activities happening here in terms of the space market. So you've got the national agenda, and then you've got ESA, and then you've got the European agenda. So I think these things will happen these things are happening in parallel. Brexit is certainly facilitating that, but at the end of the day, when you're looking at investments and where the investment money is, London in particular will always be a center of where the money is, and it will always be seen as an international center. So I don't really see Brexit affecting anything, certainly in terms of the UK market.
Okay, thank you. The next question is by Keith. Which types of new space business are most attractive for investment?
Okay, so that's actually linked to probably the first question, my first answer, and I think at this moment in time it has to be applications, and it's purely because applications is essentially a digital business, and investors can understand digital businesses more than they can understand, let's say, hardware, capex intense businesses.
Okay, thank you. There are no other questions yet, but I see that Marco is typing a message, so maybe we can wait for his question. Is there anyone else with a question? Then please submit it now.
Okay, so Marco is...
Based on my personal experience, space science is bound to safer technology rather than the one coming from new developments.
Okay, maybe Marco is Mark able to just to explain it, maybe by chatting?
Yeah, well, Marco's microphone is not muted, so he should be able to speak.
Oh, yeah, we can do it this way. It's quicker maybe. So I'm referring basically to the fact that on Earth, technology developments really increased in a few areas, optics, and whatever is bound with the biotechnology world. And that increased in a very striking way. Just to make an example, so blood analysis on astronaut is done in a very old-fashioned way by using syringes. The blood draw happens on board, and then the samples are analyzed on Earth. Nowadays, you can have silicon chips, which are really breakthrough technological speaking, and they are not still used for space applications. So it looks to me that there are market barriers for many technologies that have been developed so far, and their adoption in the space market. So that is my question for you. I just want to know if you had a similar perception or maybe not.
Okay, so in terms of, I can't really talk for HRE because I'm not part of that. But from my experience when I was working HRE about 15 years ago, was the issue here is for biomedical devices, is the clinical applicability of these devices. So I think that would probably, I think it's more of a technological barrier than it is of a market barrier. And at the end of the day, right, look, how many test kits could ESA or agencies buy that would make it viable for a company to, let's say, distract itself. The other way that you could think of is actually space tech, that from, I don't know, from microgravity program, that being applied into terrestrial businesses. We would love to see more of that. I personally don't think enough of that's been done. And if we can create, if the agency can create these opportunities where we can actually have that, it's not really spin in or spin out, then that would be amazing.